All right, the price action on the day was pretty interesting. Yesterday, we had Powell come out with those 0.25 hikes. And then coming to today, it's like we got a little bit of nostalgia of the highs that we were at within 24 hours ago. And now we're kind of dropping back down. So it's a little bit back and forth, back and forth. Now, obviously, if you've been here on the channel, then my opinion and you know my viewpoint is the downside. Now, over the next few days, I think things could chop a little bit. And tomorrow morning, we have some pretty big news coming out as well. So we have a lot to talk about. But before we get into that, I have to ask you to do two things. Consider liking and subscribing. Every single day, I make videos for you, straight to the point, right, wrong, I don't care. I'm going to tell you my winners, my losers, everything in between. Let's get into the video. So yesterday, what did we talk about? Number one, we talked about IWM. Just a quick little recap. We were looking at IWM. We talked about this basically for 2 days. We started shorting up here around 177, 176, came down to target number one around 170, 171. You actually broke that and kind of retesting here at the end of the day. But I still think IWM has to be on your watch list because I think this has room to drop down to 163, 162. Now, what I do want to say though is I totally fumbled the bag today. I forgot to tell everyone about something that was pretty big. And this was on Twitter. So if you're on Twitter, then you saw this. So I posted this pretty early, I believe, so 3 hours ago. You can see where we're at 90.49. It was my favorite play. I just totally forgot to mention yesterday's video. I was even searching. If you go back to the video, I forgot what I was looking for. This is what I was looking for. And this is a Capital One, I believe. So they have a giant bear flag on the 4 hour. Anyways, today what happened, if you go to COF, definitely trade of the day. This thing ended up dropping down towards 88.38, giving you a visual of just how well these did. I don't like to show my trades all the time as far as the winners. I like to show more of the losers from my end. But when we show the winners, you can see someone in Discord did 222% on those. People did pretty good on the day when it just regarding those. So those did really, really good. So not Conoco, I don't know why I keep wanting to say Conoco, but Capital One still very weak when it comes to the banking sector. Definitely something I'm interested in. And if you're looking at Capital One, you have to go all the way out, but you have a massive, this is a huge level you're at. So if you lose this 86, 87 region, in my opinion, your next level is all the way down towards 80 flat, which is your gap fill. So definitely keep them on your radar. But ultimately, let's get into the price action and what you're facing here on the grand scheme of things, right? So when we look at the daily chart, I want to look over at these candles. Now, when we look at Nasdaq, and I want to go over technicals because we've gone over so many fundamentals over the past few days. So you know my opinion. So I don't want to be just repeating the same thing. I want you to get something out of this when you're coming here and not just, getting my quick opinion on something which you've already had. So if we look here at the Nasdaq, you continue to wick up to 13,000 and get rejected. Sellers are stepping back in and pushing you back down. That's the not so good thing right now. So I still anticipate until you can really break above and continue to hold 13,000, you have to side with the downside thesis. Why? Just looking from a risk reward standpoint, you have more room to the downside than you do the upside. Now, where things get a little bit more trickier is when we look at ES, which is S&P futures instead of the Nasdaq. The S&P, obviously, so in comparison, right, these are your highs back from February. So the Nasdaq is already above those. It's broken above. It's trying to hold above. It just can't do it. The ES, you're still down here. You could argue you're still in a downtrend. So this is the concern for me in the market. And that's where I'm standing on the sidelines right now. I'm just looking at this, and this is the concern of where there's a disconnect between down ES and the Nasdaq. The Nasdaq is definitely more bullish than the rest of the economy. So I think you have to kind of be careful here. And if there's anything that I still like the downside here. I'm 100%. I love the downside across the board, but I do believe there's a lot of opportunity to the downside over the coming days and weeks. So I think you have to be watching these. And again, it's important that we're looking at these larger candles so you can see an overall scheme of what's actually happening. I think if we look too much at the short term, we kind of get clouded judgment when we're looking here. So we can still see the uptrend that was in place from the beginning of January to the beginning of February, from February into now. And you can still see you're kind of in this downtrend, if you will, and that's what I'm watching here. So again, now a heavy reason of what's happening and why there's a disconnect, in my opinion, is because of XLF and banks in general. So we continue to see banks like Capital One, right, getting hammered. They're pushing down. Banks are below their 200 SMA. Very weak here. A lot of room for downside here. And then when we come back in, you can see what we're looking at, obviously, for that downside. So just understand that viewpoint of it, what we're looking at there. Now, a few other stocks, few other indexes and sectors that I'm going to be watching over basically the next few days for opportunity. Now, I think banks are something you have to, if you're looking to trade the downside and you're being very aggressive to the point of, I need to be trading, and I don't think that's a good mentality to ever really be in. But if that's you, and I know a lot of people that just is, I'm not talking down anyone, just it is what it is, you have to trade. I would focus on KRE, XLF, look at my Twitter for some of the bank calls we're mentioning, but Capital One, which is COF, again, I think Capital One is probably one of the best opportunities to the downside that's going to be in front of you for the next few days. You can look at Bank of America. This sector is just the weakest of the weak. And so when I mention this sector, it's just to say that if you have to go to the downside and you're trying to push plays and force plays that maybe aren't there, which sometimes is hard to identify, and that we kind of think that a play is better than it may be, then this is a sector for you. Just going to tell you right now. Wells Fargo, Bank of America, Citigroup, Capital One. You can even go to the smaller banks if you want, that are a little bit cheaper, maybe in your price range. So make sure you're looking out there. But overall, the options chains are usually pretty affordable when you go down to these cheaper banks either way, or just banks in general. Besides JP Morgan and like Goldman Sachs, everyone else is pretty affordable when it comes to the option chain, no matter how big or small your account is. Now, the sector that you have to stay away from right now if you're looking at shorting, and I keep saying it, I see your comments down below, it's SOXX. This is semiconductors. And I want to go over some of the indexes a little bit more, the ETFs, rather than just the stocks, because I see your questions. I see your statements. You're like, Tyler, I've been shorting NVIDIA. I've been shorting AMD. I can't make money on this. I keep losing. Well, the definition of insanity is doing the same thing over and over and expecting a different result. If you're not identifying the issue with what's happening right now, it's simply this, that semiconductors are the strongest sector in the market. Like I keep saying, the only thing holding SPY and Nasdaq up right now, in my opinion, are the semiconductors. Okay? Now, you've had good runs on Apple and Microsoft, but semiconductors have done a primary source of all the heavy lifting in these indexes. Okay? So you have to understand that. So if you're looking to push shorts, this is the highest percent chance, in my opinion, to lose right now. Now, granted, if you're going very dated and you can ride the loss in the short term and you can like have an actual game plan, then yes, I think you have potential, and there's a lot of downside room on NVIDIA and AMD. You have to realize, as of right now, you continue to make higher lows and higher highs on the ETF. So when we go to NVIDIA, it's even more so. Higher lows, higher highs. It's just continuation over and over and over. And you're not going to beat that. Like there's no sign yet to go short. There's no confirmation. We're not getting any of that. So you have to understand that. But giving you like food for thought, Jay Ream runs the Discord with me. He sold about $15,000 worth of his NVIDIA stock because in his portfolio, in his long term, it was becoming overweight. That meaning that was one of the largest holdings. It was becoming too big. So he basically started repositioning. So he still has a lot of NVIDIA left, but he's just repositioning and waiting for a dip as well to add more to those shares. So just giving you like a thought process there is like, I identify and I understand NVIDIA is very, very strong. Okay. And it should be. It's probably the sector with the most growth opportunity over the next 5 to 10 years. So you have to understand that as well. But again, it's focusing on the weak sectors, focusing on the strong sectors, and not trying to force what you think is going to happen. Okay. It's not about thinking. It's about taking what opportunities are set in front of us. Okay. Now, a little bit better of a view looking at ES. And again, I'm trying to give the best visual and best insight to what's happening with some of these indexes right now. And you can see from this morning, I would say up until till like today, yesterday, the path of least resistance has been to the downside. Okay, meaning when we're this is Bookmap. If you want to get their information, the link is down below. But we've been moving up. So the past like 2 days, we've been moving up with ease. On top of that, right? Not very much sellers holding us down. So we have smaller walls. These levels aren't that big. You're breaking through. Just keep going, and you eventually topped off at 40.40, and then we just shot back down, right? Sellers stepping back in. Now, in my opinion, as you can see here, I think we are in a little bit of a bear flag to end the day. But something that's really interesting is that we started to see a little bit of some selling on the icebergs, a little bit of downside here. But again, all icebergs do is give you a demonstration of what's happening with the dark pool data. And again, you're getting more and more long side of this. This keeps happening at lows. This happened over the past few days, and it's been one of the best indicators. And again, a massive order here at the end of the day. So you're definitely seeing people still siding with that upside thesis on the possibility of a rate pause coming based on what the Fed said. Now, Again, we've talked about credit. We've talked all about that. But looking at the market now, I think you just got to be pretty patient, wait for what's going to happen. But again, tomorrow morning we do have Bullard speaking, so I have to assume we're going to come out a little bit to the downside right at market open when Bullard starts talking. Also going into what's happening with some of the chain here. Tesla, very interesting. You're getting more puts coming into the end of the day. But going into SPY, as you can see here, some bigger orders positioned, okay, for some of that downside. Those are in the money positions, right? Qs, again, more positions, right? VIX, you're seeing more calls coming in here, right? And I want to talk about VIX here in a second. Also, IWM, more puts, obviously IWM, the weakest of the week. Now, the last thing we're going to look at here, right, before I let you guys out of here, is I want to do a little bit of digging what's happened on VIX. And VIX, we've talked a lot about it. So VIX, you ended up dropping yesterday, like down to like 21. Today, you hit lows of around like 20.2. What's been the big level on VIX for us, like for the past however long? Again, I say it over and over. It's the $24, $23 region. If you can hold that level over time, we've consistently moved from 24 to like 30 to 35 with ease. For instance, the past few volatile days that we've had, look where you held 24, 30, 24, 30, 24, 30 over and over. So if we get back up there, it's again something I'm looking at. VIX, you can't chart like a normal stock. It's not like an equity, so you have to understand that as well. But as we look at the markets, definitely something that I'm keeping my eyes on, specifically what's happening with VIX and how it's correlating here. But again, it just looks interesting that VIX is trying to get a little bit of love, trying to hold and stick around this $23, $24 region, while Nasdaq on the daily time frame is getting a little bit of it's showing not necessarily weakness, but it's showing signs of potentially topping out here. If you get another wick like this on the daily of just getting rejected at 13,000, 13,100, I mean, this is showing some weakness, whether you want to say it or not. So again, and then ES, again, obviously a lot of weakness here, bearish engulfing yesterday, and then another really weak candle on the day. You're still bouncing on the 200 SMA, but nonetheless, you still are, it is what it is. You're giving up strength right now. SPY near the end of the day also holding the 200 SMA. So those are all the big levels of what we're watching there. So again, weakest stocks, weakest sectors, banks. I can't say that enough. Banks are my weakest sector out there. If I had a gun to my head and they're like, Tyler, you need to go short, banks are the play. That's what I did today. Worked out. Probably continue to focus on banks as long as we have all these issues right now. But again, you just got to be patient here. If we start holding below the 200 SMA on the SPY and ES once again, it was really easy trading to the downside when we were there. So that's going to be the focus right now. Just sitting a little bit on the back burner, waiting to see how we play out and can we get back below these major levels. Because we need to identify too. Again, like I said on Nasdaq, if ES starts getting below 200 SMA, I think it's a matter of time before the Nasdaq starts to roll over. But we're not going to be able to time the top on the Nasdaq. And when we look at the Nasdaq, look how much time you have till you get back down to the 200 SMA. A long time. You have 800, 900 points from where we're at right now. So just realize what's happening and kind of the risk to reward strategy. Now, I'm not saying you can't make money to the long side. We had some scalps to the long side as well. But just understand, I believe the bulk of opportunity of risk reward where we make more money to the downside or the upside right now, potentially if it plays out. Right now, the confirmation is to the downside. We haven't had confirmation of a breakout to the upside yet. And I do want to say one thing before I let everyone out of here. Also, if we're looking at what's happening, I've had a lot of people say, well, where do you flip from getting out of a bear market? If we can start breaking, I've said this for a while, if we can start breaking out of previous highs or swing highs that we had and making higher highs, then I think technically you would be out of this bear trend. So we can make a high above 13.7, you're out of that trend. But as long as we're below that, now structurally, like we're above the 200, daily moving average. Look how it's held on the weekly. This is really awesome. You've been holding for some time here on Nasdaq. But we also need to consider if we're still making lower highs still on the longer scheme of things, then you have to be a little bit concerned. But I will say during this trend, you are still pushing up. As you can see, I have to side with and go over both sides of the trade, not just the bearish, but both sides. And you can still see you're channeling to the upside. That is a good thing. However, there is no guarantee or confirmation of breaking out until you get above 13.7. So until that really happens, I'm going to be pessimistic and not be overly aggressive to the upside. Then once we break that out, then I think there's a lot of room to start going up. But that's where we're at right now, and that's kind of the bulk and census of what I'm doing right now. And I'm not confident of that breakout yet because why? ES is still really at the bottom of its trend compared to our Nasdaq being near the highs of its trend. So that's my viewpoint there. The last things as well, DXY definitely getting hit today. People keep asking me, Tyler, why is DXY getting hit down while they raise rates? Why are bonds going down while they raise rates? You need to understand something. DXY and really bonds specifically don't move like equities. They don't move like a stock. So let's say hypothetically, NVIDIA comes out with great earnings, okay? And everyone says we're buying NVIDIA. NVIDIA sometimes after earnings will shoot up $20, right? Something crazy, some really big implied move. Bonds aren't going to move like an equity with high IV typically, right? Now, the reason why I think we saw a lot of this downside was some of the panic selling and, some of what's happening with banks having to free up liquidity. But when we look at what's happening here, you need to understand that it's not going to just bounce right back up like it did before. When we look at what happened previously on banks, or on bonds, we had a lot of consolidation, a lot of sideways, and we started moving up really quickly here once again, okay? So they have to understand what's happening, and this all happened on a lot of the inflation news and a lot of that stuff happening, right? So we have to understand where this is. But before that, we have little short spurts, and then it'll happen again and again, right? But right now, you just got to identify that. Just because you're moving a little bit slower right now does not mean bonds aren't going to rise back up. Just like people were saying bonds were going to collapse like in September. They didn't. So just sit back. Nothing's really changed from a fundamental standpoint, but it makes no sense to continue to shout the same things over and over. And I don't want to be someone that pushes an agenda beyond what you're able to trade right now. And right now, I think people need to be focused on some of this stuff here. And I hope I answered some questions about NVIDIA and semiconductors and made a little bit more clarity about what's happening in that sector. Because I know a lot of people are just getting torched because they just keep shorting stocks that make higher highs and higher lows when structurally that makes no sense. I'll have a market structure video coming out on Saturday, so that'll be a little bit of education. But have a go on, traders. Comment down below if you have any questions. Appreciate all love and support.